Hey guys, welcome back to the Independent Investor Channel. We're coming to you from the Big Apple, New York City, New York. It's so good to be with you. My name is Ryan. On this particular channel, we talk about different investment strategies. We try to educate along the financial education, and we talk about different accounts that you can use. On this particular channel, we talk about, terminology that's used in the financial world. And unfortunately, it kind of has a language all of its own. All right. So, I can't change that for you guys. But what I'd like you to do is just, be open minded when you're hearing some of this terminology for you guys that are new investors. All right. Just kind of get used to some of the terminology because it's something that I'll refer back to in my presentations, guys, and I throw it out there naturally. Okay. So I thought it was worth it to take just a little bit of a pause and just kind of explain in this particular video sectors and what that means. It's another way of saying, groups, all right, within the financial industry. And the reason why this is so important is it can kind of help you break down, individual groups of stocks, right? And it allows you to pick the best out of those groups that'll fit your particular portfolio needs. All right, and gives you that opportunity to broadly diversify along that portfolio spectrum. Okay, so guys, if this is your first time tuning into the channel, please subscribe to the channel so you're notified of future videos. Guys, share this video with anybody that you know, guys, and please enjoy. All right. The first particular one I've got up here is the communication services. All right. My representative out of the communication services is Verizon. Okay. Now, I get that a lot of people out there are going to hear certain stock recommendations and they may prefer a T-Mobile or they may prefer a Comcast or an AT&T, guys, and that's all right. All right. I stress all the time that the particulars that make up the account aren't as important as the account itself. All right, the self-managed Roth IRA, for anybody that's new to investing, that's the primary place you need to be looking at, guys. All right, and the specifics within that account, guys, you can win with a Verizon, you can win with an AT&T or a Comcast. All right, but what I've got identified up here in blue is the percentage of a recommended allocation. Okay, now in general terms, that means basically how much of your portfolio should be made up of these particular sectors or groups of stocks within any one particular sector. Okay, so it just kind of helps give you an idea or a baseline. Now, this is not written in stone. All right, if you find that you want to be more aggressive on the telecom sector, certainly that's up to you to adjust. All right, I say all the time on this particular show that no two portfolios are the same, and I mean that. All right, there's a lot of folks out there wanting to recommend a lot of things to be placed in portfolios, cookie cutter. All right, and no one recommendation is going to be appropriate for everybody. All right, but I contend that the correct account absolutely applies to everybody. All right. So the next one I've got up here is the consumer discretionary. All right. It's an 11% recommended percentage in your portfolio. And I just put up there my representative from consumer discretionary is Disney. I've owned it for years. All right. It's one of my favorite stocks. It's a cornerstone that I'll own the rest of my life. Probably end up giving to my children someday, quite frankly, because it's not necessarily about the money for me. It's more about the plan, right? So consumer discretionary and 11% as a benchmark within that particular sector. The next one is consumer staples, all right? Product sector, all right? My particular representation from the consumer staples sector is Pepsico. Again, a long-term holding, pays over a 3% dividend. Phenomenal company, diversified along its product line, and it's a company that I'm proud to be a shareholder in. So, the benchmark there is 10%. All right. So just to kind of give you an idea when you're looking at adding pieces to your portfolio, the recommended allocation there is around 10% of your total overall value within that particular account. All right. The next one is energy. Pretty volatile sector. It's actually one of my favorite sectors to invest in. Energy has been on a real tear recently because it went into a historic downturn. All right, from the highs in Brent crude, going from all the way from $100 all the way down to $25, where it kind of settled out and found its bottom. It's since come back and doubled since then. We've got a trading range going on right now between $45 and $55 in energy. But in any well-diversified portfolio, you should have some level of energy exposure, all right? The recommended allocation is at 9%, and I just threw out Chevron as my number one holding within the energy company. I do have other holdings in the energy sector, all right, but I just throw that out there as a recommended over a 4% dividend payer. Chevron's a beast. And it's one that I don't mind throwing out there for my viewing audience, letting you know that I'm actually an active shareholder. Healthcare is another one, and you can see the recommended allocation there of 15%. I've actually got 3 holdings within the healthcare sector. Wonderful dividend paying companies, huge market caps. I've got Johnson JNJ on here as one of the cornerstones of my portfolio. It can really be an addition to any portfolio holding J&J. It's a company that I love. I don't mind holding it forever, and that's exactly my intention. I'm long J&J. It's one that I can set for dividend reinvestment. It pays me every quarter to be a shareholder, and I'm proud to say that I own it again. So just focused on these recommended allocations to kind of get your mind in the habit of breaking down some of these sectors as we go forward and start to build out these portfolios. All right. The next one is industrials. Industrials is also one of my favorites. I love Cummins. I love John Deere. I love Caterpillar as industrial sectors. I don't own any of those. I actually find the best of breed within the industrial sector to be United Technology. I love some of the defensive names within industrials as well, but UTX is the one that I've got a cornerstone in my particular portfolio. Again, pays a healthy dividend. You see some of the themes about how I go about investing, guys. I'm looking for the best of the best within each one of these sectors before I put my hard-earned dollars to work in these. And I would expect that you guys take that critical approach or careful calculative approach to investing that I take. That's just my perspective, right or wrong. That's what I don't mind recommending to my viewing audience. All right. The next one is materials. A 3% allocation, guys. I've got a really light exposure to materials right now. I don't own Praxair, but I'm actually looking at it as an investment perspective or potential right now to give me some materials exposure. And, I've gotten my favorite sectors that I gravitate to, all right? And the reason that you would own, a particular sector or look to own them all is because if you've got a problem over here with the energy sector and the discretionary sector, you would hope that those other sectors, maybe the industrial and materials, start to outperform the market, all right, and kind of counterbalances, a particular negative sentiment on one sector and a positive sentiment on another sector, right? So materials at a 3% allocation, not very much, but again, just looking to get you some exposure within that particular sector. Technology, it is my absolute favorite sector out there. I've come across some videos that recommend for new investors not having exposure to the technology sector because it's too volatile or it's too risky. I can't disagree more with that perspective. I think that's really, really poor information to be giving new investors, especially if you're young, guys. You've got to have some exposure in the technology sector. And this is a recommended allocation of 19% in your portfolio. That's 1/5 of your total overall holdings, right? to own an Apple, a Facebook, a Google, an Amazon, a Cisco, an IBM. Guys, I can keep, you can win with every one of these names, right? And you guys can beat me up over, which one is better than the rest. But again, on the independent investor channel, I tend not to focus on, all these winning proposals as opposed to making sure that those particular sector technology names are finding their way into the right account. So any capital appreciation you get or any dividends that you're paid, you're going to win with that in that account because you're being returned 100% of those profits. And you're not sharing those profits with a financial planner. All right? So within the technology sector, I believe that based on your risk tolerance, I could recommend a Cisco, which is $185 billion market cap company, and just take that nice healthy 4% dividend, and sleep easy at night, guys. You're going to win with that. All right. If you wanted to be more aggressive, take on a Facebook or a Salesforce.com, all right. Phenomenal companies, right? But my point is you can win with any number of stocks within any one of these sectors, but the idea is to break them down so you kind of understand where it is you need to add more exposure or maybe take some off the table when you're looking to manage your portfolio. And the last one is utilities. Guys, you're not going to get a whole lot of growth out of the utility sector, but 3% recommended allocation for the utility sector. And I just threw up there Duke Energy, which is one of my favorites. I actually have a lot of stocks I cover in the utility sector. It's really a safe sector to be involved in. Duke Energy pays a dividend over 4%. It's a phenomenal company, and you're going to get that exposure to utilities and be paid quarterly to have that exposure to utilities. All right, guys. So listen, I hope you enjoyed this video on sectors broken down. A lot of what we try to do is kind of explain some of the terminology so you can kind of employ some of these tactics when you're looking at building out your guys' self-managed portfolios for yourself. Guys, listen, I can't stress enough how important it is for you guys to leave your comments at the bottom of my videos. If there's specific topics that you want me to address, I can do that. It's really my strong suit to hear out where people are coming from and look to retool. I've already done it for a couple folks online, and I know the advice makes a huge difference. It's probably a life-changing recommendation for those folks, and I'm glad to do it, guys. It's a lot of the reason why I came out with this particular channel is just with the sheer intent of helping people and empowering investors, one investor at a time. All right, guys. So listen, subscribe to the channel so you're notified of future videos. Share the link, share the video with anybody out there, friends, family that you think could benefit from the information. Hit the thumbs up button, guys. Thank you so much for tuning in. Thank you for all your support, guys, and thank you and good luck in your guys' financial futures. Thank you so much.